Welcome to PhillipCapital Weekly Market Watch. I'm Kai Wen from the Global Markets. For this week's episode of Market Watch, we will recap our view in January 17 and share our opinion on the US biotech sector. Our view in January 17 is to allocate gold in the portfolio due to uncertainty in Trump's presidency and volatility coming from the FX movement due to the Fed direction on further rate hikes. Other than gold, our research is also overweight on China and Russia, as these two markets sit nicely at the cheaper end of the valuation hierarchy relative to the other markets. China and Hong Kong have since played the catch-up to the rest of the world. For Russia, we see further weakness in the MICE index due to political uncertainty and a strengthening ruble. We will recommend a wait-and-see approach to see if the support holds at 2000 level. Here are some of the performance of our view from January to February 17. Key support level for gold is at 1,200, and further movement to 1,300 shows the demand for gold in a volatile climate. Here are some of the most traded ETFs with gold exposure. We expect China GDP to be above 6% and Russia to move out of the recession, as Putin is expected to talk about some economic and social reform for his 2018 presidency. The central bank should also loosen their policy due to the recent strength in the Russian ruble. Looking at the CSI 300 index that consists of 300 A shares listed on the Shanghai and Shenzhen Stock Exchange, we see a recovery at 3,300 level, mainly due to a weakening renminbi outlook and also the upcoming National People's Congress conference in March. And also, we see positive data coming from the financial sectors. For Russia, we expect the GDP to expand in the year of 2017 with recovery in oil prices and the easing by the central bank due to the strength in the ruble. Putin could also talk about the social and economic reform for his presidency in 2018. Here are some of the exchange-traded funds exposed to China and Russia. Our next view is the most talked about sector in the year of 2016, where the iShares Nasdaq Biotechnology Index declined from 340 to 240. The fall of the biotech sector started in the year of 2015, with a call for a revamp in the drug prices pricing by Hillary Clinton and a conflicting view for rate hikes in 2015 and 2016. And also we have black swan events like Brexit and the sell-off in China that leads to a further deterioration of the biotechnology index. However, we see that the headwind seems to be clear after Trump's victory. As you can see in the recovery in the 250 levels, time will tell if biotech will play catch-up to the rest of the sector. We think that the biotech has the ability for longer-term growth due to increase in drug demands, especially from traditional drugs to specialty drugs. Current low valuation should also generate interest in the M&A activities. From data by Express Scripts and Bloomberg Intelligence, commercial drug spending grew 3.8% in the year of 2016. And on the commercial spending, we've seen an increase from 28% in 2013 to 37% in 2016. With this, we have come to the end of this week's edition of Market Watch. For more information on global equities, you may approach any of the representatives from Phillip Global Markets.